Good Monday morning. Glad to be back. I was unsure if this was going to be a work day or not. Anybody else feeling that way? Where it's is it still the holiday? Are we taking time off, or are we going to come back at it? But I decided to jump on, so here we go. Let's get started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
All right. Let's jump into it here. As always, I like to start with talking a little bit about pricing. And so first thing I'm going to do here is take a look at some pricing. Look at a $400,000 purchase. If it's FHA with 3.5% down, just kind of the same scenario I've kind of been running just to kind of see where pricing is at. And then also to let you know, if you have a deal, I'm not just going to tell you I have good pricing, I'm going to show it. So if you have a deal to price out, we'll certainly take a look at it here and see how it looks for you. But I haven't been on here in quite a few days, so I wanted to just see what pricing has done. Has it gotten better? Has it gotten worse since the last time we looked? Let's see what we find out here. Oh, that looks a little bit better. So let's modify that to an eighth higher. I want to see where it's at. Okay, so yeah, pricing got marginally better. So 5 1/8 is just over a half of a point on this FHA. And then let's see where 5 1/4 is for how many points. And what is a point again? A point is 1% of the loan amount. So if the loan amount's $400,000, the 1 point would be $4,000 for lender fees. And we don't have any other junk fees, no underwriting fees, no processing fees, anything like that. So that's going to be a little bit different than comparing it to somebody else. So you have to look at your total lender fees and the interest rate, not just the points, because we get rid of those junk fees and we put everything under points. And that the reason why we do it that way is because the points are tax deductible. And I can't give tax advice, but decide if that's best for you. Talk to whoever is qualified to talk about taxes. So looks like 5 1/4 didn't get much cheaper compared to 5 1/8. So I'd probably go with 5 1/8 and just pay that less than a point. And then 5 3/8 gets us to no points. Damn close. Like it's what would be the difference? I mean, we're talking maybe $100 in cost at 5.375 on that loan size. So wanted to take a look at pricing there, and then as I was talking with some other people in the industry here over the break, a friend of mine, who's actually a real estate agent friend of mine, had a really good point as we were talking about refinancing, which is kind of goofy, right? Lenders and real estate agents are mostly going to be talking about purchase, but we were talking about the advantages to refinancing. And I'm going to kind of slow walk us into it here as a recap. Let's talk about some of the benefits of refinancing, as we were talking about before with the blended rate, right? So if you're somebody that has a really low interest rate on your current mortgage, but you're carrying consumer debt at a high interest rate, what is the combined rate of all of that debt? So if we were to lump it all into one package, what is the total interest that you're paying on all of your debt? That's the blended rate. And we have a calculator we can pull up to figure that out. So if you figure you have, $200,000 in a mortgage at 2%, and you have $100,000 of consumer debt at 15%, what's the total of that? We can plug that in. Let me see if I have that up here. I'll just pull it up in here. We'll just do it. So if we have 200,000 at, we'll call it 2%, and then 100,000 at 15% for the consumer debt, calculate that. That has a blended rate of 6.33%. Let's see, Damien says, what are interest rates looking like right now? I'm closing tomorrow. My lender mentioned they are able to adjust interest if it lowers. So I just priced out a deal here. I don't know what your details are, so we can plug in your details. But I was plugging in an FHA purchase with somebody with a 680 credit score, and we were looking at 5.375 with no points. So that was what we were doing there. Now, FHA is going to have a lower interest rate than conforming conventional. So I would just need to know what your details are. I can plug those in here and we can see if that looks, if it, see what interest rates are for you. Or you can reach out to me, let's see, conventional 511s. All right, let's take a look. In California, what is the house worth? So you got a 511 loan amount and a 750 credit score in California, appraised at 801, and so I'm assuming it's a refi. 801. Okay. I gotta change this to conventional. Make sure that all stayed there. Looks good. Change this back to par pricing. All right, let's take a look and see where we're at. Let's move it up from there. Rate. So at 5.75, you're at about 0.7 with points. You said you're looking for no points, so let's move it up from there. Modify. 875. Ooh, you're damn near no points at 5.875. What is the difference there? Let me pull up my calculator. 1.5 minus 1.353. So you're at 0.147 in total points at 5.875. And again, we don't charge the junk fees like the underwriting fees and all that kind of stuff. So you have to look at the total lender fees. So when you say no points, do you really mean no lender fees at all? So I would just check the section A of your loan estimate. See, why is it so high? Is there anything I can say for backup to explain why it should be around 5.8? I'm paying $700 for the rate. Yeah. So if your total, yeah, I mean, well, let me just do it. I'll multiply by 5110. So yeah, my total lender fees at 511 price for the 5.875 is $751.17. What percent is your loan fees? Let's see. So I mean, I would just you're saying like, what do you say back to the lender? Just let them know, hey, I want to adjust the rate to 5.875 with $750 in lender fees. Can you do that for me? Yes or no? And if not, you can transfer your appraisal over to a mortgage broker like me and redo it and close in a week. So, or if you need to close for some other impending reason, then just close it. But that's where pricing is at right now. Make sure that this is active, because you see here, if I blow this up, you see these ones down here that say expired. So I have to be careful when I'm looking at this, because those expireds are not pricing I can offer. But the top pricing here that I have, they don't say expired, and they do say, this 5.875 as I scroll it across here with the with very little in points there. Let's see, where does the 5.8 come from? What website? So I'm a broker. That's like a proprietary service that I pay for. So I have over 200 lenders that I work with. I take one application, I price it out, and the cheapest ones go on top. And the lender that's going to be the cheapest is going to change all the time based on your personal scenario. So like where this said CMG, like you change anything about that, change it from conventional to FHA, you change the credit score, like anything, the cheapest lender is going to change from there. But it's not a website that you can go to. You just need to talk with a mortgage broker like myself. We have access to that, and then we're able to price that out with you and for you. And I'm always happy to also, thanks for the follow, by the way. I'm also happy to jump on a Zoom call with you so you can see, take a look behind the curtain, so to speak, and see what different options you have available for you. I just feel like that's, just a better way to do it. Like it's one thing for somebody to say something, but you get to see it live. Just makes it a little bit more impactful, I think. That would be what I would want, and so that's why I offer it that way. I'm trying to look and see if I missed any questions here as far as that goes. But all right, so I'm going to back up and talk a little bit about some of the benefits to refinancing. Obviously, if you're able to lower the interest rate, great. But we're talking about changing the blended rate. So if you consolidate any consumer debt that you have that typically has a higher rate of interest, and even if you have one of those super sexy low interest rates around 2%, if your blended rate is higher than, what we were looking at here, 5.875, then you can lower the total interest that you're spending. In the example that I gave, the blended rate, if you have $200,000 at 2% mortgage, and then you have $100,000 at 15% of consumer debt, then you're at 6.33% total debt rate. So if you consolidated that and you brought your blended rate from 6.3 down to 5.8, you're saving some interest there. But the conversation I was having with this real estate agent friend of mine was, what if some of the consumer debt that you paid off was an auto loan, right? So if you have a car loan out there, the other cost that's associated with an auto loan is your insurance. And so if you were to pay off an auto loan, not only could you lower your blended rate if you're paying a higher interest on that debt. Some auto loans are really low. They do that to be able to move inventory. But if you had a high interest and you're paying off an auto loan, then you can also amend your car insurance from full coverage to liability only. And so that's another way to impact your monthly bottom line to be able to bring that down. And that's something that I just didn't really think about bringing as an option to you guys, just because I personally haven't had auto debt for years and years. And so we kind of get stuck in our own bubbles and look at our own situations and then apply that to other people. And that's a mistake, because most people that I help, when I'm pulling their credit reports, they have auto loans out there. And so that's just one thing that I just, neglect to think about, is then you also have the full coverage. Now, if you want full coverage, regardless if the thing is paid off or not, then this is immaterial, right? Then it's not an added benefit to you. But if you don't care about having your insurance company cover the little dents and scrapes that are lesser expense on an auto accident, then you truly want liability only. So get rid of that loan if it's of a higher interest than mid fives in interest. Get that consolidated and then reduce the cost of insurance. And I was kind of curious. I didn't do this yet, but for some show prep, I was going to ask AI, like, what is the average cost savings for changing auto insurance from full coverage to liability only? Because that was, a question that I had just kind of off the, in preparation for what I was talking about there for the added savings. Is it a little bit of savings? Is a lot of savings? How much? And obviously it's going to be different for you guys. I'm just asking AI for an average. So it's saying, on average, to switch from full coverage to liability saves $1,300 to $1,600 per year, which is $110 to $130 per month on the monthly budget. And so on the margins, that's impactful. I think that's impactful. That you'd be able to save that over and above the interest because you have the insurance expense. And then obviously, if you're paying higher insurance, like I pay higher insurance because I have kids that drive. And so, if you're in that same boat, then the savings are going to be more impactful. If it's just you, like if you're just a single person, then the savings might be less than the average, so it's just, that's just going to be, and I'm just talking averages here, but the concept is still one to really think about. Gosh, oh, wow, thanks for all the likes, guys. I appreciate that. I forget to do that. I didn't even introduce myself. Hi, my name is Kenny Murden. I'm newer to TikTok. I'm not newer to lending. I've been lending since 1999. And let's see, Sal says, is Loan Sifter price engine software customizable based on correspondent lenders? Yes. So if I go back into Loan Sifter, and I blew it up, so I gotta let me share this with you again. If I blow this up, I'm going to go under. If you look at the names, they say wholesale. And then if I scroll down, eventually we'll find one that either doesn't say wholesale or it'll say correspondent. Because they're all in there. And usually correspondent would be cheaper because it might have an added cost to it. So I'm surprised I'm scrolling this far to answer that question. But ultimately, they're all in there. And then the other thing that I can pull up for pricing is called Moso, which is proprietary through Loan Factory to show their pricing engine. But pricing engines kind of just give us a general idea of which ones to look at first. These are all saying wholesale. But I know the answer is yes, that because I see correspondent pricing on there. I'd like to get a house within the next 8 months or so with a VA loan. Definitely reach out. I'd love to help you out. Can a broker add a lender? Yeah, you can manually add lenders in there. But Nunya, love the name, by the way. I get the anonymity. If you notate my phone number at the top of the video, whatever, feel free to call or text and I'll be able to help you out. Just put VA loan so I remember it was you that was mentioning what you want to do there. And then what we'll want to do, do I have any experience in Iowa? Yes, I'm from Minnesota. So I've had a lot of deals actually, they just kind of cross the borders into Wisconsin, Iowa, Dakotas, whatever. I live in Texas now, but being from Minnesota, I've done a lot of Iowa. So I know there's some unique pricing differences with Iowa. Let's see. Kenny is the man. Great guy to work with. Very passionate about helping others. Thank you, Dankzilla Sports. I wonder who you really are. I don't know, the person behind the name, but I'm sure I know you. So I appreciate the shout out. Let's see. Guess who I really am? That's exact. I have no idea. Let's see. Dankzilla Sports. If I guess and I guess wrong, then I'd feel bad. But text me dank equals whoever the hell you are, and then I'll have a chuckle. But as I was saying, for people that are looking to buy, in 2026, even if it's 8 months out, some of the things that we can be doing in preparation for that purchase is wherever your credit score is, make your credit score higher. So we can do tricks like having somebody that has old credit cards that have zero balances, have them add you on as a Trey. Oh, Miller? If that's Trey Miller, how's it going, man? Good to have you here. Are you still doing insurance is my question. But yeah, no, if we can get your credit score higher, because it goes in about 40 points, buckets. Anytime you have your credit score bump over the next threshold, pricing just gets a little bit better. So we might only save you, $500, $1,000 or whatever. But hey, if I saw $500 on the ground, would I take the time to pick it up? Yes, I would. So if we can get your credit score boosted up a little bit, that's what we're going to do in that time frame, especially if you're on the lower spectrum, because then we're not talking about $500. We're talking about thousands of dollars. So if we're able to, make, impact the credit scores on that lower end. Actually, Trey knows exactly what I'm talking about on this because I talk about that. See, no more insurance for me. About to be moving out of Arizona. Interesting. Why? Arizona is amazing. But you'll have to give me a call after the show here, and we'll have to catch up, see what's going on. But that trick where you have somebody that has a credit card. Let's say the credit card was open for 10 plus years, and there's you're leaving Minnesota for Arizona. Smart man. I heard you guys got some nasty cold snap coming in right now, and had some bad snow here recently. So definitely a good move there, Snowbird. But yeah, no, if you add onto somebody's credit card, you can get next month, you can get their 10 years of good history to show up on your report. And so that's where I've seen people get, huge swings on their credit score instantly. So if you're able to have somebody add you onto their credit card, especially if it has no balance. If it has a big balance on it, that's not necessarily good, because then it's going to look like you owe more debt. That'll affect your debt ratio. But if it's a low balance, or it's a card that's paid off and it's been open and active for a long time, that's the one that you'd want to get added on to it. If you have questions about that, reach out and we can walk through it. Another thing is I can help have a conversation with the person that's adding you on, because there's some nuances there. Oh yeah, I heard about all the Minnesota stuff with it's like the child daycare centers and stuff. I've been scrolling TikTok. It's been hitting my feed. Tim says, "What's up, Kenny? Do you do mortgage lending in Missouri?" My team covers the entire country. So if I can't personally do it, somebody on my team can. So if you have something that needs lending, then definitely reach out. If it's something where we would want to be working on a more permanent basis, I can always add the states. The company that I work for is in 48 states, including Missouri, and I can just add the license, no problem. Should I pay off my mortgage at 4%, around $55,000, or find another rental property or invest? So, personally, on that, I would not pay off 4% debt. I would invest it in something else. That's just personally where I'm at, because I know that I can take $55,000 and get better than a 4% return on my money. That's what I would do. Now, I'm not licensed to give investment or tax advice. So I would say we could have kind of a general conversation about some investing ideas. But even picking up another rental property is going to yield you better than a 4% return. So, Troy, I would definitely not pay off the debt. I'm not a Dave Ramsey guy. I don't think debt is a bad thing. If you're able to use your funds to get a return and then compound that interest of return, you're going to do way better than paying off debt, especially when it's low interest of 4%. Yeah, use that debt as leverage, absolutely. It's absolutely crazy. At least $20 billion in medical fraud with the backbone Somalia of Minnesota. Speaking truth and facts. Yeah, I don't know all the details about the stuff that's going on in the Minnesota deal with the tax fraud, but I did hear like the FBI is looking into it now. It's becoming kind of a bigger story. At least it's showing up more on my feed. And guys, I don't look for news anywhere. My my mental health is more important to me than finding out what Fox or CNN wants you to be anxious and worried about all the time. In my opinion, those channels exist to basically sell advertising for pharmaceuticals, uh, uh, legal services, and whatever they're advertising, but they want you to sit there and just live in fear. Asher says, when buying manufactured, if it's tied down with skirting, is that considered permanent? Yes. But the other thing you need to do is make sure that it's been converted from personal property to real estate. And so there's just a, if it has a mortgage on it already, then it's done that. But if it doesn't have a mortgage on it yet, that's just another step that needs to be taken. And it requires like a engineer certificate, which is maybe $500 to $1,000. So just be ready for that added expense if it's not already been done. Jonathan says, hey, Kenny, where are you seeing par rates after the holidays? I just priced it out, and I can price one out for you. But they moved down from where I last checked it out. And I don't even remember the last time I was on here. But we were looking at, so I run the scenario of a 680 credit score FHA purchase of 400,000. And it was something like, was it 5 1/8 was much less than a point. I'd have to pull it up here, but still in the mid to low fives is what I'm seeing for that scenario. Asher says, we're looking at getting a mortgage to purchase it. So sounds like it's an existing manufactured home, and happy to help you do it. I actually prefer manufactured homes over condos. It's like that added step is way less annoying than having to deal with an association. A lot of times condo associations are really problematic in the lending industry. So, a lot of times I'll run into people they get pushback on trying to get financing for a manufactured home. And I way, way prefer it to working with condos. Just way less, difficulty. How long will it take to get a mortgage when applying? You'd be able to turn around from applying to closing within 30 days. Sometimes you can get it done as little as 2 weeks. It's really, with technology, AI, and all the different advances right now, it's getting a lot easier for speed to get it done. So with that, I always say, I like to give you the steering wheel, the gas pedal, and the brake. So if you want to make changes on what we're doing, if you want to go faster and close sooner, I'll give you that capability. Or if you're somebody where you're just not wanting to close so quickly because maybe you don't want to double pay rent and a house payment or whatever the case may be, we can purposely put the closing date further out as well. Let's see, in Illinois, let's price it out. Let's see. And what are my thoughts on the Austin, Texas market? I think it's bottomed, but it did definitely decline. Is my thoughts on it. But there's so many employers that go in down there. So it's definitely it's never going to be unless a bunch of employers move out, that could have another negative effect. But it's just big employers are still coming to the DFW and Austin area. All right, let's take a look at your deal here. Let me pull this up here, Jonathan. Illinois, 299 balance, 7.375 bought in 2024, about 81 LTV. So I'm going to take the lower of your scores of a 730, 299 loan amount. What is that at 81%? 89 divided by 0.81. Oops. 299 times 0.81. No, I thought it. There we go. 369. I said 269. All right, there's our 81%. And did you say 30 fixed conventional? Yep. And we'll go to par. Well, I'd like to see that price or better. And then state is Illinois. It's gonna, let's see, there, maybe that'll work. Oh, thanks. You saw I was looking for the, it doesn't have to be exact. It just has to be in the state. So 575 is a little less than a point. So a point again is 1% of the loan amount. So you're a little less than $3,000 in lender costs at 5.75. And then what's the payment on that? If you look here on the right side, principal and interest is $1,745 plus mortgage insurance of $57 per month equals $1,802. But one thing that, if you're looking at mortgage insurance, obviously you're not going to have mortgage insurance very long at 80% or 81% loan to value. But I want to show you this. If I modify this and change it to FHA, which I know everybody's kind of like, oh, then it's, you're going to have mortgage insurance for a longer time with that. But if I do that, and remember it was $1,800 for the monthly payment, as it rethinks about it here. So this is going to have a slightly lower cost on the closing costs, and look at the payment goes down to $1,780. So it's not a big deal, only $20 a month, but because the interest rate is so much lower at 5.125 that even with the mortgage insurance being on there and being higher, more expensive mortgage insurance, your total payment goes down. So that's one thing to always think about with FHA is that the payment might be a little bit cheaper. Your current P&I is a little over $2,100. Yeah, we just replaced the roof and water heaters and going to replace the floors soon. So yeah, if you want to grab some of that cash out of the house to pay for itself, sounds like there's an opportunity to do that. So that's definitely something to consider. And that's another thing I was talking about with that real estate agent here over the long break is there's so much equity that's trapped in these houses. Let's see, so hoping some appraiser would be generous for a good LTV. Absolutely. Always looking for that. Let's see, how much would the payment be for 204,486? Asher, I don't remember the loan scenario to answer that, to figure out what the interest rate is to multiply that for a payment. Can you remind me? Let's see. We own both properties and we're putting the house on. Let's see. We own both of our properties and we are putting the house on as down payment. So Asher, was this the manufactured home Was that the scenario that we were looking at there? I'm just trying to think how can I come up with an interest rate to multiply for your loan amount there. But I would assume we'd be able to do, an FHA on that. Let's see. His is 751 minus 570. We are using one property for the down payment, and average is 135 a year with 50,000 in debt. Yeah, Jonathan, I can get you an LE for sure. Just text me LE and I'll reply back to you. So that's how I'll remember it's you. But yeah, so Asher, let's price this out real quick because that 570 score is going to be impactful on the pricing. And also remind me where in the world you are, Asher. Like what state are you in? Let's see here. $135, Kansas, thank you. Purchase. Manufactured. Here. Yes, manufactured. I'm assuming it's multi-wide, double wide, or triple. Let's see, Kansas. And the purchase price, I'm not sure how much you're putting down. I know you're taking it from the other property. But the base loan amount is 204,446, and I'll just assume that you're like a 225 purchase price. I have no idea. Let's see. It would be about 50,000 that we could use escrow. So 570 score. Let's go ahead and submit that. I gotta modify that because we need at least 10%. I'm close there on my guess of the purchase price. So I'm going to change that to assume a 230 purchase price. So we need a minimum 10%. Although we could try conventional. So here it's saying 6.125. And you'd be paying 1 point. And so the payment there would be the $1,264. Let me see if I can bring that over there. $1,264 plus $85 a month in mortgage insurance gets you to $1,349 per month. But just note that does not include your taxes and insurance. So your total payment's going to be a little higher than that. Can you price a loan, if you don't mind, 1.5 million purchase in California? Yeah, let's do it. Let me back this out here. Modify. All right, purchase 1.5 with 20% down. So 1.2 loan. Is that, what is the jumbo limit in California? So if you're in a high cost area, then your 1.2 is a high cost, not a jumbo loan. It's Orange County. In Orange County. Yeah, so you're a high limit, so that's better than jumbo. So let me go back to conventional. Purchase, and your credit score was 780. Let's see. Change this back to no. Take a look. So 5.99% is a little less than a point. The Jean Baptiste Bunch says hello. Hello, Jean. But yeah, let me zoom in on this a little bit. So yeah, 5.99%. Here's some payment, principal and interest payment for you. I am located in the Dallas, Texas area. I'm from Minnesota, and I moved down to Texas about going on 6 years ago. Do we deal in South Carolina? Yes. My team will cover the entire country. And then if it's something where if I'm doing a lot of business in any given state, I'll add that license and do it personally. But otherwise, I'll, as I get things in, I'll refer them to one of my team members. How can I get someone in contact with me? If you look at the top of my video here, it has my cell phone number. You can text me and just text me South Carolina and I'll remember and I'll get back to you that way. Okay, I'm in Florida looking to buy. Perfect. Reach out. We're helping several of your neighbors right now. Florida is one of the places where I'm considering adding my personal license out there because just all the big population centers. So like here in Texas and in California, like there's just so many people in those places. That's just generally where I get people that'll come in. I'm 27, make $800 a week, and I'm in despair, thinking I'll never own. Well, let me tell you the biggest hack that anytime I talk to somebody when they come to me and say, I'm looking to buy the cheapest place possible, we'll look at condos and we'll look at manufactured homes. Let's see, I need a 4-bedroom home for my partner, and I have 6 kids. God bless you. That is amazing. 6, I have 3, and I know that's a lot of kids. And to double that, holy boy. Gene says, I have 10. We got some Catholics in the crowd. I know my upbringing, we had a lot of people that had 10 plus kids in their families, and, for religious purposes. Wow. Thanks for all the likes, guys. Holy cow. I've broken a record for how many likes we had. That must have been you, Trey. You texted the number. Thank you. But no, I was talking about, a hack to be able to buy a house that is cheaper than a condo or a manufactured home, which those are good options. Especially with the large family, a manufactured home is definitely something that we should look at. But the other thing we can look at is a multi-family home. So duplex, threeplex, fourplex, because we can use the income that would be generated from those other units towards the approval of the home. So if you can buy a house and add income to the application based on the future income that would be generated from that property, that's something that we need to consider. And it'll vary based on where you're at geographically, whether that's going to be better or worse than buying something like a manufactured home that's just going to be less expensive. The beautiful thing about manufactured homes here in Texas is the property taxes are so much less because they're taxed as though they are raw land. And so, property taxes kill you in Texas. So I'm located in Texas, but wouldn't we need land first? No, I'm thinking we would buy an existing manufactured home that's already there, maybe, a used, manufactured home. Then the property taxes are going to be so much less. So you're going to be talking about hundreds of dollars versus thousands of dollars. And that's going to impact your monthly payment positively, way lower. And guys, some of these manufactured homes are flipping nice. So, especially if they're newer. So that's something that we can look at. And honestly, we could do the thing where we finance the land and put a brand new one on there. But if it's brand new and we do it that way, it's likely that that's going to be more expensive than buying one that already exists. So we'd probably be looking at the used if we're trying to get it as cheap as possible. Is USDA loan good for first-time buyers? What are the requirements? It's a fantastic option. The downside to USDA is it's the most restrictive for your debt to income. So that means for the same income that you have, you'll approve for the smallest loan. So it's a very conservative loan program, and it has income limits. It has geographical limits where you need to be far enough away from the city. So if you want to text me USDA, I'll walk you through all of that stuff. We'll just kind of go through it. If you want to do a Zoom, I can show you the eligibility map, how to log into it, how to look up, if a property approves for USDA or not. I can show you all of that stuff, and to give you an idea on the income, typically if you're a smaller household of less than 4 people, so you, a spouse, and 2 kids, you're going to pretty much be limited to just over $100,000 a year in income. So if you make more than that, you exceed the limits. If you're under that, then we can pursue it further. We're currently in a trailer home, 3 bedrooms, and we are trying to remodel to sell higher. Got it. Do you own it, or are you renting it, or you're selling it? So you own it. And do you own the land, or do you pay lot rent? Bean says, me and my wife together make $31,000 per year. I would just say let's run the numbers, because it's going to look at your income versus your debt. I'm not based in California, but I can help people in California. My team can help anybody in the country. Let's see, my husband's mom owns it because she knows the taxes yearly. So you're fixing up that house to sell it. I hope you get as much as you can for it. I know in the DFW area here, it's a softer market, and so it's hard to get that top dollar. So when you're saying you're fixing it up, my thoughts are to try to not spend too much in the fix up and just try to get whatever you can get for it as close to as is as possible. But that's in this market. If you're in a better market, then my advice might change on that. Let's see, my mother owns the trailer and we pay lot rent of $300 per month. Another thing, little baby bunny, another thing to think about when you're selling it is you can maybe sell it on what would it be called? Like owner financing. So let's take a look at that option as well, because that might work well for the person that's trying to buy your place. So rather than getting a lump sum of the entire amount, get a down payment and then installments. So that's what I would be considering. Is it free or do we have to pay for help? As far as loan application, my loan applications are free. My advice is free. I only get paid if the loan closes. And I get paid by the lender, not directly from you. So I get a percentage of the loan amount, if that makes sense. So it's not free, like I make money, right? But you don't ever pay me directly. Let's see, we don't pay rent, but we did pay her over $8,000 for this trailer. So we will get the selling money. And I'm assuming then you need that money to put down on the next place. So that works against what I was saying, where you could sell it on terms, but you can still get a down payment when you sell it on terms. So you'll have a little bit of money there. And then the added installments, I'm just saying it's something to consider, because I'd like to be able to help you transition to your next place as soon as possible. And I don't want it to hang up on waiting to be able to find somebody that is going to want to pay you top dollar for your property, where you'll probably get more money overall if you sell it on terms. But I would say do both. Ask for, sell it. Sorry, I had to do a little thing here, but, ask to sell it at market value, whatever that is, but then also ask somebody to come in and do a down payment and payments. Let's see, of course, I was never taught any of these things. My credit is also 723. I don't know if that matters. 723 is considered between good and excellent credit. So you're going to just get really good terms on your loan, whatever we do next. So that's good. It doesn't really, at that point, it doesn't really need to be improved in order to get best pricing. You already approved for best pricing. And then with that, it is 11 o'clock here in the central time zone. I'm generally on here from 10 until 11 central, Monday through Friday. So I'll just say last call for questions. If you want to reach me, save my phone number, text me, call me, is a good way to get a hold of me. And I'd be happy to take a closer look at your individual situation. Screenshot, that's another good option. Love it. Shot you a text. Look forward to doing business. Jonathan, thank you. Appreciate all the comments. Gosh, over 7,000 likes. This is a record for me. Thank you, Trey. I know that was a big part of what you were doing there for me. Appreciate that. But appreciate all the likes. Appreciate all the follows. Absolutely feel free to reach out. I'll be back on here as often as I can be. And some of the times are going to be changing into the new year. So if I change the schedule, like right now, I try to get on every day at 10 a.m. Central. If that changes, I'll just update people as that changes. But if you like the content, follow the channel, because what I do is I take these videos and I chop them up, and AI chops them up, and then I repost any of the highlights. So if you like the content, be sure to follow. If you know anybody that's looking to buy or refinance in the next, several months, share this with them. if you think that this might be helpful for them as well. And every day I like to get on there, price out a few of the deals to give people access to not just tell you that my rates are lower or better or whatever. I like to show it, and I know it's a really aggressive pricing because I know what exists out there. And so what I'm really doing is I'm holding the feet to the fire of my competition to make sure that they're going to be giving you a good deal. So if I'm not the one that's going to provide you the good deal, at least you're able to take what I'm doing and bring it to them and make sure that they give you a good deal. So that's a little bit of the meaning behind what I'm doing, because we all need to watch our bottom lines, especially now when there's an affordability crisis. So I'm going to do my part to solve it, and that's what I'm doing. I've reduced the amount of commission that I make per deal, which is why the pricing is better. And in order for those other lenders to compete, they're going to have to do the same thing. And so that's just what I'm doing. And I hope that helps you. I hope that helps those that you'd be referring to this channel. And so that's the little bit of the reason behind it. But I appreciate all you guys with the comments. It makes the hour just fly by. Enjoy your the rest of the time between Christmas and New Year's. I've heard it referred to it as some funny stuff. I got all caught up on Stranger Things. You know, I did all my binge watching and my scrolling. I gained weight, so I'll need to be losing that again here in the new year. So we'll talk more about that as we go on this holiday week. And I appreciate you guys being here. Thank you so much.